CfC St. Moritz Mountain Talks.
I'm here to the CfC St. Moritz Mountain Talks, here live from the CfC St. Moritz 2026, and I'm sitting here with Chris Maurice, CEO and co-founder of Yellow Card. So Chris, welcome to the discussion.
Oh, it's good to be here, brother.
Thank you very much. So Chris, when I first met you, you had like a stack of cards, licenses, I don't know what, everything in your hand, that you were like, I'm somehow homeless. So can you just let us know about that story, please?
So yeah, basically, so I travel a lot, right, for work, and I like collecting things. But when you travel, you don't really have anywhere to put stuff, and you don't want to lug it around with you, right? And so I started thinking, well, what's something that I can collect that would be a lot of fun to collect and doesn't take up a lot of space? And so now when I go to a new country, I go through the full legal process of getting a driver's license, including, I've taken like eye exams in Ghana. I've done, you got to do the driving test. You got to do fill out the paperwork, right? And so, I have a bunch of driver's licenses from around the world. And I film the process. And one day I'm going to give people the YouTube content they didn't want or ask for.
Okay, that's the story. Good. So let's jump into the discussion. So you as Yellow Card, it's like one of the clearest example of how crypto can solve real world problems on the ground, right? So you're fulfilling kind of the banking, the unbanked. But before we go into like more detail, what does that mean for you, like in Yellow Card? What does it mean banking the unbanked?
Yeah, banking the unbanked, I think is something that I think in the beginning we were focused on, but the more that the company advanced and the more that we came to understand some of these markets, I can tell you that banking the unbanked is largely a myth, right? It's one of those things that I think people talk about a lot, but it's not what's really happening in practice, right? People that don't have bank accounts generally don't have bank accounts for a reason, right? Just genuinely don't want one. They don't have enough money to justify it, any other number of reasons. I think, what we've landed on as, really our mission is ensuring that, institutions around the world, especially in emerging markets and companies that operate in emerging markets, are able to utilize this technology in a way that benefits people there, right? And that actually works for the people on the ground. And I think that is, that's what's been the big focus of the company, right? Is how do we ensure that payments and, finance in general is able to work for individuals by enabling businesses to be able to do it at a high level for them.
So just what you said now, right? So there is still like the Bitcoin at the beginning narrative about banking the unbanked and so on. And I think like in what I always hear from like the Western part of the world, it's kind of, yeah, we're here to bank the unbanked and blah, blah, blah. If we look where you are working, that's where the things are done, right? So what does true utility look like in practice, right? So how do we really bank the unbanked? As you said, through technology, but can you just give us a little bit more like insights?
Yeah, so I think when it comes to like banking people, right? I think sometimes you need to get specific because I can give you an account that will allow you to hold money and maybe send money sometimes, right? But like, what does that necessarily do for you if you don't have any access to credit? You don't have any access to international payments, right? You don't have any way to send money to friends and family across borders. You don't have access to really anything other than a place to put your money. And I think for us that is more, it's that underbanked aspect that we're more focused on, right? So rather than like the guy that doesn't have a bank account, we're more focused on how do you ensure the proliferation of stablecoins and of this technology so that people around the world, especially in emerging markets that don't have access to reliable international payments, that don't have access to, a secure means of savings, right, in dollars or, other stable currencies, how do you ensure that they are able to access this technology in a way that benefits their lives, right? And look, when we started out, we were B2C and we were going directly to people. And that is a journey, man. Let me tell you, B2C in some places of the world, that is an experience. And I got the battle scars to prove it. But
So you need driver license for that, right? To drive
exactly,
there.
yeah.
Yeah. Okay.
But I think, for the last, I mean, what, almost 4 years now, we've been very, very heavily focused on the B2B side, right? How do you empower corporates, financial institutions, banks that are impacting people's lives every day, right? That, people already use, right? People use a bank, people use their mobile money company. They patronize different corporations, right? They buy food and this and that. How do you help these companies to offer better products, cheaper, right? More affordable services, and have that really trickle down. And I think that's the way to reach 1 billion people, man. Doing it direct is, look, you can be WhatsApp and reach 3 billion people, but I think that's rare, right? B2B, you can reach a lot more people.
Okay, that was also the reason why at start of 26 you shut down like the consumer app, and then you really fully switched on. So you already touched a little bit on it. So why going away from B2C? What was the hard part in there? I mean, was it really size wise that you thought like, hey, look, we can have a bigger impact if we go B2B, and how did you realize that? I mean, after 3 or 4 years going one way with 2 million users, right? And then afterwards you're like, oh well, maybe you have to shift. I mean, also as a company, that's like a big thing, right? So
Yep.
how did you manage that, and how did you see that you have to shift?
Yeah, so we had both, right? We had the B2C, and then we were doing B2B as well. And I think, when we started to dive in, what we very quickly realized is, with B2C, it is expensive, right? There's a lot of marketing, there's a lot more cost from like a marketing standpoint and pushing this message out, right? It's a lot different than like B2B sales. Um, the compliance in some of these markets that we serve is expensive, right? It's difficult, which makes it expensive. We had to connect to ID authorities. We had to use, all these different ways of being able to screen people and transactions, things like that. And on top of all of that, the countries that we're serving, the average income and the average person just doesn't have as much sort of expendable income, is not sending as much money overseas as, your average person in the US or Switzerland or, Europe or somewhere like that. And so I think you combine all those factors, the amount of money that we would make off of each sort of individual customer was obviously a lot smaller, right? Relative to the amount we would make on businesses. At the same time, the B2B side of the business was growing, 3, 4x, right? And so, it was absolutely booming. I think, back, 2022, probably like 10x on the business side, right? Basically, we decided back then, okay, well, we're going to shift the focus away. We never kicked people off of the app, right? Which is why now we have, right? So now we've, totally shut down the app and all that. But yeah, we shifted that focus a long time ago. And that's really helped, I think, the company take off and, become more well-known in the industry.
So why are like companies or you did partnerships with Visa, Coinbase, PayPal? Why Yellow Card, not some other like crypto infrastructure players? Why did they decide, and also other businesses, right, to go with you? What was the reason? What is your unique like selling point there? Why are you better than others?
Yeah, we're the only ones that understand emerging markets deeply.
Okay,
That's the big thing.
Okay, what do you mean by that?
So there's like, when you look at infrastructure and stablecoins and infrastructure for, crypto, but especially stablecoins broadly, it's largely commoditized at this point, I would argue, right? When you think about the wallets, the on and off ramping against, dollar or euro, the payments, anything like that, it's largely commoditized. Anybody can kind of do it. It's not actually that hard to spin up and be able to do a lot of this stuff in the US, Europe, et cetera. Obviously, there's some, regulatory blockers and things like that. And also at the end of the day, that's just not what the market is in the US and Europe, right? People are not using stable coins and crypto in the US and Europe to make payments. Like, I don't know about you, dude. My Visa card works totally fine, right? My bank account works great. Like, I don't have those same problems. And so it's just not the same use case, right? People look, I mean, Switzerland, Europe, America, whatever, people are trading dog and cat coin and they need to, go to something in between. And that's what stable coins are. And so it's just a much different use case. And I think, for us, what we specialize in is the emerging market piece, right? The stuff that's actually quite difficult to do. How do you take an illiquid currency? How do you take a currency with no price discoverability and create a market around that, right? To be able to move in and out of USDT, USDC, et cetera. And actually making those first and last mile payments on the ground in these countries. I think that for us, that's really the unique selling point, and that's why we've been able to land. I mean, a number of these big names that you mentioned, and so many more.
So why is Visa not, how do you say, why is it not possible for them to do it on their own? I mean, why do they need you then there for that? I mean, with their expertise, with their experience and everything, why do they need a collaboration with Yellow Card if they're so big all over the world, or maybe not?
Yeah, so stablecoin payments is, I would say, quite unique in terms of the broader payments landscape, right? Versus traditional payments and TradFi and all of that. And so, for the same reason that PayPal and these other guys work with us,
Hmm.
it is a lot easier for them to work with us and work with a company that has now, I mean this is all we've done for the last
Yeah.
what, 6 years plus
Hmm.
COVID counts as 12, so that makes it 18 years. This is all we've done, right? And so it's one of those things where are you as a company going to invest the millions of dollars that it takes to put people on the ground, to hire new talent, right? Because with a lot of these traditional finance companies, they're not crypto native talent, right? It's not crypto native people, generally running it. Go on the ground, set all this stuff up, right? Deal with it, right? I mean, there's always something going on,
Hmm.
right? Especially the markets where
Hmm.
there's always something going
Uh-huh.
on. Deal with it all, right? Or, do you want to outsource a lot of these problems to a company that knows how to do it, has the compliance apparatus, the licensing, et cetera, and is, good at doing that? Right. And so it's always the trade-off, right? Of build versus partner, right? And I think there's a reason that these companies time and time and time and time again choose to partner rather than try to build this stuff.
Okay, but and that brings me just another like extra question that because we had that topic also at the conference here, M&As, IPOs, right? I mean, you're with what you're doing with your expertise since 18 years, like say since 6 years. I mean, that makes you attractive also for companies to just come to you and say like, hey, let's just take over the whole team, right? I mean, how do you see that? Is that more a threat or a chance, or how do you see that for Yellow Card now?
Yeah, I mean, look, we've received offers in the past.
Mm.
We are still here. We're still growing. That's look, I mean, obviously, if somebody comes along and it's the right team, the right moment, all of that, it's something that we would consider.
Hmm.
But I don't think, in general, I don't think that that's what you build a company to
No,
do, right?
absolutely,
I don't think
absolutely.
that you can build a company to get acquired. I think that you have to build a company that's good and
Hmm.
that,
Hmm.
it works and builds cool stuff and puts that stuff out there. And you build to IPO, right? You build to, go public and create a brand and a company that's going to outlast you. Um, if you get picked up along the way and it's, it makes sense, it's the right team, the right moment, then, fantastic, right?
Hmm.
But that's I don't think that that's necessarily what you target, right?
Yeah,
When you're
absolutely.
when you're building a company.
Okay. Okay. So you touched on also on like regulatory, like regulation. So you had also like, how do you say, you put like the regulatory excellence like as a competitive advantage. So as you said, we have the compliance, we have the license, and so when was it again here like strategic, like okay, we have to focus on that first and then the rest? And why like did you see that and not just building and let's see what comes then?
Yeah, so this was something that was very important to us from the beginning. And I think when you look generally at the space, and this is what we saw when we looked out, broadly at the countries that we serve at the time that we were starting, is look, granted, I mean, look, the space has gotten a lot better, right? We're in 2026 now. Okay, it's a little different now,
Yeah.
but there have been a lot of cowboys in this space. I mean, we've all seen some shit, man. That's so it's one of those things where when we were starting out, it was like, man, we're working in countries, especially when we were starting, that don't have regulatory landscapes for this industry, that don't have any regulation around this stuff, where, at the time, especially, the regulators haven't even heard of this industry in a lot of cases, right? Maybe they've heard of Bitcoin because, the price goes up sometimes, but they don't know what stable coins are or any of that. And that was the case for most of the world, 6 years ago, right? We looked at that and we said, we have an opportunity here to like actually develop the industry in a positive way. And I think that if you go in and you go look, I mean, if we went in total cowboy, no KYC, do whatever the hell we want. I mean, man, we probably would have made a lot more money, right? I mean, like going in, like, some of these cowboy companies make a ton of money, right? But like, it's not actually good for the industry long term. And it's not good for like the company long term, right? Like if you want to build something that can be a brand that's going to outlive you, right? Like either you become so successful that nobody can stop you, even though you're doing bad stuff, right? Or you build a company that actually, is good and tries to improve the industry, tries to, create regulation where there is none, works with the regulators. I mean, goes through the hard work of explaining to these guys, what crypto is and what Bitcoin is and what stable coins are. And man, I mean, some of these guys, I mean, we've had to have the same conversation 5 times, right? I mean, like, but we sat there and we did all that,
So it
and
was education. I mean, that
a
would be
lot
the
of
next
education.
question. I mean, you're working like those different countries with different cultures and so on. So how was that? If you can just like give us some examples also. I mean, as you said, 5 times we had to explain it. So what was something that you said like, okay, that's not really interesting?
Well, it depends on the regulator, right? I mean, look, we've walked into the office of regulators that know as much as us, and we've walked into the office of regulators that have never heard of the space and need you to explain, Bitcoin 6 times before they get it, right?
Okay.
And so it's a wide range, right? Because you never really know, and there's so many regulators in so many countries, right? You go to one country, you could have, 3 different bodies that you need to talk to, right? No different than the US or Europe, where there's, all these different,
Absolutely.
regulatory bodies, and you got to go talk to them. And then, well, this guy tells you to talk to the other guy, and then you got to talk to that guy. And, that's something I think that, we, again, like we saw as extremely important and we saw as a competitive advantage, the
Yeah.
willingness to be able to do that, the willingness to put people on the ground. A lot of these companies don't operate with people on the ground. We make sure that we have people on the ground that are able to go, hang out with these guys, even when, I'm not in town, or like our GC's not in town, or anything like that. And so, yeah, I think it's one of those things that, again, we wanted to develop the regulatory landscape. We wanted to make it better overall for the industry and for, people that are going to come next, and for, other projects. And I think, we've been able to do that now, fortunately, in a lot of countries.
Yeah. Which shows you again, so you did all the work and now Visa, PayPal, Coinbase is coming like, okay, we have here something that we can work together. So you did all the work that was needed beforehand. So just to have like an outlook, also, what do you expect now for 26, or let's just go for 26 with Yellow Card, and where do you put like the focus on? What is really like important for this year for you? What do you see like as a focus topic also?
So in 2026, I think the big thing that we're going to see and that the industry is going to see is a lot more institutional adoption. And we've already seen this. I mean, well, we've seen it. I mean, I think, in US and Europe, I think it's still coming, right? And there's still a lot more to happen. But I mean, we've already seen this a lot across a number of the markets that we work in, banks and other large financial institutions that want to get into this space. These institutions, I always remind people, these guys move in months, not minutes. Right. And, we've had now, obviously, with like the Trump administration and more favorable laws in the US and, in other parts of the world, that's been in place now for almost a year. Right. And so I think people are finally starting to, get a little bit more comfortable with the space, right? You're starting to see a higher comfort level. You're starting to see more interest, more, involvement from these large institutions. And I think that 2026 is the year that some really cool stuff is going to get launched, in conjunction with these institutions.
Yeah, just go on.
Oh
Sorry.
yeah. Well, I mean, the last thing I was going to say is, and I mean, this is normally what gets me in trouble at conferences like this, is I do pretty firmly believe that long term in the industry, that like a lot of the stuff that you see today that I mean truly powers the industry, DeFi and trading and things like that. I think that will be very niche at a point. Right now, it's most of the industry. I think that DeFi and all of that becomes extremely niche within the industry.
Okay.
Right. In the same way that, for the general population today, crypto is still pretty niche. Right. I think that, DeFi trading, all this becomes niche, and like it's the institutional adoption that actually drives the industry over the next, 10, 20, 30 years. It's banks that will be able to provide interop, right? It's major financial institutions getting involved with stablecoins, powering, true on-chain FX, on-chain, settlement of, stocks and securities, all of this. That's what's going to be driving the industry for the next 30 years. It's not going to be, 100x levered perps on, your favorite DeFi platform, right?
Yeah. So maybe just as a final question, then, like, will that like the adoption? Do you see that coming from the emerging markets that you work in, and then push into kind of the broader ecosystem? And if so, I mean, what is the influence or like the impact if that's the case? So do you see it coming from like the markets you work in and then go in, or vice versa, that like Europe and the US pick up so much speed that it's just pushing then to the emerging markets?
Yeah, so it's not even like whether or not I see it, right? I mean, anybody that looks at the statistics will see, when you look at what are the top countries on earth for adoption of crypto and stablecoins, India, Nigeria, Philippines, Vietnam, Kenya, South Africa, right? I mean, it's all emerging markets.
Yep.
Right? You're not going to find Switzerland on the list
right.
anytime soon, right? At the top
Yep.
for adoption of this technology, because it's again, you just don't have the same like core need for this technology in Switzerland or in the US or in Europe the way that you do in these markets. And so, 100%, it's emerging markets that are driving. And again, I mean, to be clear, they're not driving the DeFi side, right?
No.
That is US,
Yes.
Europe, East
Yes.
Asia.
Yes.
They are driving like the institutional usage and the actual use cases of crypto outside of trading and speculation, right? That's all being driven from emerging markets. I think, yes, do banks in the US and other parts of the world catch on to that? For sure, right? And I think, look, you're going to end up in a world where, again, you don't need, Swift, you don't need some of these other, protocols that the banks have used historically, because you have stable coins, you have, blockchain, right? And, the banks are going to work together to build their own, I'm sure. I have no doubt, right? The same way that they did like Zelle in the US, after Cash App and Venmo and, and all this, right? And so I'm sure that they'll build their own blockchain. Maybe it'll be Swift, maybe whatever. But it's, at the end of the day, it's these banks in emerging markets that have, gravitated towards this technology because it actually works for them.
Yeah.
And I don't think that any system like Swift or any of these other systems, because they were never built for the rest of the world, they were built for the US and, Europe, right? They were never built with Africa and South America and Southeast Asia in mind. I don't know or think that these systems actually can adapt to be able to properly serve these countries. So, and look, maybe I'm wrong, but I think, generally the systems that are built for one part of the world, it's going to be much harder to adapt those to another part of the world than it is for stable coins to be used, right?
Yeah, absolutely. Okay, then Chris, thank you very much for this conversation. Really liked your insights also for me, especially personally, also to see like the other side, not all like we live in Switzerland. Here we have like, as you said, things that payments, we don't have any. I talked, for example, to Vences Casares, right? He's from Argentina. I mean, he told me then what they had with their currency, why he likes Bitcoin and everything. So it's always refreshing to just hear like also like that part of the story. So this has been the CfC St. Moritz Mountain Talks live here from the CfC St. Moritz. And thank you very much for your attention. Thank you very much for watching and listening this first series of the CfC St. Moritz Mountain Talks. We could discuss with Karen Weinberg the infrastructure piece as well as how institutional players come into the space. With Chris Maurice, the emerging markets and stablecoins, and with Chris Giancarlo, some political topics. So I hope you liked it, and if you have any feedback, please share it with us. And with that, I say grazie fitch e bella sera. Thank you very much and have a nice day.